The initial rates are coming in there, and the Nifty, well, it's opened up as flat as can be.
Very quiet morning of trade, range-bound day, muted action so far. It's a very listless session for our markets. We're just up close to about 0.1%. The mid-cap index has seen a bit of a pickup. It's up close to about 0.5%. The Nifty Bank has gone ahead and hit a record high.
It's largely been range-bound. Those jagged edges is what you can see through the day, but it's been in a very tight range between 18,400 and 18,650 or so.
Welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra, and here are the headlines for the day. Stock market snap a 2-day losing streak led by bank stocks. Nifty Bank ends at a record closing high. Mid-caps outperform the blue chips. Bharat Forge's Baba Kalyani says railway modernization is happening at a rapid pace, adds that manufacturing in India will see a game-changing situation. The Defence Ministry takes a leaf out of the Railway Ministry's playbook on modernization. The US FDA places Sun Pharma's Halol unit under import alert, suggesting future shipments from the unit to USA may be denied entry. The stock slips on growing regulatory concerns. Eicher Motors looks to assemble and sell completely knocked down units of Royal Enfield bikes in Brazil, which it expects will become its largest market after India. The stock revs up. JSPL falls despite winning the bid for Monet Power. L&T Tech gains after JP Morgan maintains its underweight call on the stock. Dharmaj Corp makes a stellar debut on the Lal Street. Here's the lineup of what we have in store for you today. It's a packed show. In Market Opinion, we have Ramdev Agrawal of Motilal Oswal Financial Services. And in Big Corporate Voices, we have Baba Kalyani, Chairman and MD of Bharat Forge, talk about railway opportunities. But let's move on to the day's market action first up. The Lal Street is back in the green as market snapped its 2-day losing streak, aided by the financial stocks. Sensex rose by over 100 points. Nifty gained 50 points. Bank Nifty also posted record close by gaining almost 500 points. Nigel D'Souza is here with the market wrap. Nigel.
Well, it was a good trading session, actually. All the frontline indices did pretty well. The Nifty, though, the sense you get is it's still in a bit of a consolidation phase till it takes out those lifetime highs. The Nifty Bank, that was the one that was firing away today, and it had a bit of a breakout day in terms of an up move. The broader markets, though, they performed, and that's something that makes portfolios feel rather good. In terms of the indices, well, you had the banking index that did well, but the PSU banking index, that was the one that got its mojo back, and that was flying away. Remember, that's the best performing index in 2022 so far. On the flip side, the Pharma and the Realty index, both of them were under some pressure. But if the banking names did well, then the top gainers on the Nifty will include the banking names. So you had Axis Bank and IndusInd Bank, both of them did fairly well, while Eicher Motors has been eyeing newer geographies, and that stock was up close to around 2%. On the Pharma index, though, you had a couple of losers, and Sun Pharma continues to face the regulatory issues. The Halol unit was in the dock yet again, so that stock was down close to around 3%. Giving it company on the downside was Divi's Laboratory, and Power Grid as well did see a bit of a cut in trade. The PSU banking names, though, that's the way to go. Bank of Baroda, PNB, as well as Canara Bank, all of them flying away in trade. On the losing edge, you had LTI, Mindtree, as well as India Bulls Housing Finance. Both of them were under some pressure. And it wasn't a good day for Pharma, so Lupin as well was under some pressure. To sum things up, the Nifty is finding support at around 18,500, although it needs to take out that 18,850 decisively to see a bit of a breakout towards that 19,000 odd mark. For the time being, retail will be happy because the breadth of the market has improved.
Oh, yes, it has. It was a day in the green for Indian markets. Thank you, Nigel, for that. In fact, let's get you some expert opinion now. Ramdev Agrawal, Chairman and co-founder of Motilal Oswal Financial Services, spoke to us earlier today about their annual wealth creation study. This year, the study talks about classifying stocks into consistent and volatile categories. Listen into what he had to say.
Everything is not cyclicals. So we said, let's look at the consistents. Okay. And we defined consistent. What is consistent? Like a predictable company, predictable and unpredictable company. So predictable is what the company, this is our definition. You can have your own definition. But predictable companies are companies whose earnings, because stocks are slaves of earnings power. So earnings are consistent in the sense that year after year, either it is same or little higher. Character of the company has to be consistent, and that gives predictability. And the moment the market is about jo dikta hai wo bikta hai. So, you know, as the predictability comes, the valuation of the company keeps rising. Okay. And that's why we are not able to explain very modest growth of 10-15% and a lot of this FMCG and all, but they're consistent. But their multiples are running into 75, 80,
Because
85.
they're predictable.
Because they're predictable. And then then maybe market is predicting a lot longer than what should be done. I mean, what we are used to. Maybe in all the 70, 80 P multiple companies, market is saying, okay, last 25 years has been very good. The next 25 also looks to be as good.
In fact, we'll get you some more opinion now. Mir Vora, Director and Chief Investment Officer at Max Life Insurance, is not too bullish on IT services and says that he's more focused on domestic sectors. Take a look.
To that extent, I'm not that bullish on IT services. Maybe it'll go back to that original level of 10-12% growth. Definitely not the 15-25% growth that we saw in the last couple of years. On the other hand, you have the domestic economy coming out of a slowdown because of the COVID phase. We haven't used our bullets of fiscal, etc., and we have enough space in the domestic demand to sustain. So as long as the rural economy sustains, which I hope it will, I think I'm still more focused towards domestic sectors, and that's why IT per se is less attractive to me at this point in time compared to the domestic sectors. As far as passenger vehicles are concerned, I continue to be constructive. And even for commercial vehicles, because if we believe that the recovery is on its way, then definitely these segments will continue to do well.
Let's move on to the second headline now. Baba Kalyani of Bharat Forge was also on the panel with industry leaders in the CII summit. He said railway modernization is happening at a rapid pace. He also added that manufacturing in India will see a game-changing situation if the Defence Ministry takes a leaf out of the Railway Ministry's playbook on modernization. The stock soared 4% in trade today. Listen in.
There are pockets of opportunities where things are happening at a much faster pace. I'll give you the example of railways. The railways are undergoing some tremendous modernization. Just day before yesterday, a tender was out for 1,600 locomotives of 9,000 horsepower. Siemens was the lowest bidder, 20,000 crores. It is all supposed to be produced in India in an Indian plant. In one more week, there's a similar tender out for 9,000 horsepower locomotives, which is going to come out, and then 200 Vande Bharat trains, and then 100 high-speed trains. Now, this is the kind of initiative that Mr. Vaishnav has taken in his ministry to create industrialization of the railway manufacturing system, which was somehow embedded in the last century for many, many years. And overnight, this is going to get completely modernized. What took Europe and America 50 years to do, India will do in 10 years. This is going to create a huge manufacturing ecosystem, especially in the area of electrical equipment, because these are all electric. We have, as a policy, Indian Railways have moved from diesel to electric, as you know. The same thing is happening in defense. There is a whole slew of policy changes that have taken place in the last 3, 4, 5 years. If the Defense Ministry starts doing what the railways are doing in terms of creating this large industrialization capabilities, then I think India will have a game-changing situation in manufacturing for the domestic market also.
At the same summit, Uday Kotak said Monetary Policy Committee could hike rates once again in February. He believes repo rate at 6.5% could be when RBI starts to pivot from monetary tightening. Listen in.
There could be one more rate hike, and that may be the time for thinking about a pivot. But we got to watch very closely the data, and maybe around 6.5 as it looks today, subject to what happens to the world, subject to what happens to oil, subject to what happens to many, many other things. And based on that, I would say that at this stage, maybe 6.5 is where there could be a time to pivot. A growing economy needs to have a current account deficit. And we keep on having a current account deficit for a long period of time. But at some point of time, we must be Atmanirbhar. Even this year, we will be $120 billion negative current account deficit. Means our profit and loss account in foreign exchange is we are earning less than what we are spending. Therefore, we need to get Atmanirbhar on our current account. And second, I understand fiscal deficit consolidated has gone up worldwide thanks to COVID. And India is at consolidated, give or take, around 10% of GDP. We need to have a credible, consistent, resilient plan that we will get better on P&L account, even on fiscal deficit.
Okay, that is the view coming in from Mr. Uday Kotak. And let's stay with the banking space now. PSU banks, they soared in trade after that index rallied close to 4%. Bank of Baroda hit another life high, while Bank of Baroda was also one of the top gainer after Credit Suisse raised its target on all these names as well. So look at that, big gains in the PSU space. Nimesh Shah is here with the details. Nimesh?
The big, buzzing sector is the PSU bank stocks, and it looks like the upgrades are pouring in for that particular sector. Last week there was Morgan Stanley who raised the PSU bank targets and estimates, and today we have Credit Suisse raising the target prices of many of the PSU bank stocks. In fact, they've gone ahead and upgraded Bank of India to overweight now from underweight, and they've raised the target price to 105 versus just 42 earlier. In fact, they have also raised the earnings estimate for Bank of India by 5 to 20%. In fact, Credit Suisse says that Bank of India, has been seeing improvement in profitability with PPOP ROA up to 1.7%. In fact, the bank has also increased, NIMs have improved for Bank of India by 40 basis points in quarter on quarter, and that's likely to go up by another 50 basis points by FY24 versus FY22. So the NIMs are going to be quite strong. In fact, they're expecting ROA to improve to almost 10% in the next 1 year or so, and the valuations are still quite attractive at less than 0.7 times FY24 estimated price to book. So valuations are comfortable, and hence a big upgrade on Bank of India. In fact, they've also gone ahead and raised target price on SBI to 730 now, and Bank of Baroda to 220. If you look at the PSU Bank Index, that itself is up almost 71%. Y2D and all the PSU bank stocks, the likes of Canara Bank, Bob is up, in fact, up 122%. Canara Bank is up almost 100%. Union Bank is up almost more than 100%. So the entire basket has rallied pretty hard, but it looks like there is further upgrades coming in, and that's the reason why the entire sector is buzzing today.
All right, Nimesh, thank you so much for bringing us all those details. To the third headline today, bitter pill for Sun Pharma after it fell close to 4% after the company faced regulatory headwinds. The US drug regulator listed the company's Halol facility under an import alert. Ekta Batra is standing by with all those details. Ekta?
Thanks for that. Well, yes, definitely disappointing news which has come in for Sun Pharma, because they have been issued an import alert at their Halol facility, which is based in Gujarat, implying that all future product shipments from this particular facility are subject to refusal of admission to the US market until these regulatory issues are basically resolved. Now, remember that this particular plant has already had a bit of a patchy history. This regulatory action comes after an inspection which had taken place earlier this year, where they were issued 10 observations, after which in August of 2022 they were issued an official action indicated status for this particular facility, which was basically a continuation of an OAI for this plant which was received by them in 2020. So the problems have been continuing, in terms of inspections as well as observations since pre-COVID levels around 2019. And remember that this particular plant at one point in time in around 2015 also had a warning letter. So there have been, it has had a patchy history when it comes to the US FDA. Now, in terms of this particular incident, there are 14 products which have been excluded from this particular import alert. The company has said that this particular plant is around 3% of their total US sales, including the 14 products. And if you exclude it, it would probably be lower according to analysts. And hence, maybe the impact financially wouldn't be less, but the larger impact is, yes, they do have a long road ahead when it comes to remediation. And also one of their other facilities, which is the Mohali plant, was also issued an OAI, official action indicated status, some time ago.
Ekta, thank you so much for joining us with all those details. It's time for a break now, but stay tuned. We'll be back on the other side with more headlines.